Hello, everyone. Good morning, good afternoon, good evening, depending on whichever part of the world you are in. Welcome to today's very interesting, insightful webinar that we're looking to have. We have this webinar on NextGen Payments, the changing contours. This is being hosted by IBS Intelligence together with Hexaware Technologies. With us today, we actually have some very eminent panelists. So maybe I should start with an introduction to the panelists and welcome them on board. We have Ravi Shankar Subramanian, who is SVP and Global Head Banking Practice of Hexaware. As I was mentioning a little while ago with the other panelists, Ravi is one person I've seen actually, up all the time. He has customers around the world, and as they say, the sun never sets in his empire. Ravi is an industry veteran, with more than 25 years of experience, and is working with banks around the world. If I have to make a comment with your permission, Ravi, Ravi is one guy I've seen with a real thinking, active mind, right? And he never ceases to surprise. I've known him for some time now, and you always, look up his profile and he will actually surprise you with, for example, he just surprised us last week saying he just got himself recertified as a Google Cloud architect, right? So there you go, Ravi. So, pleasure to have you here. Looking forward to listening to you, and thank you for being on the panel.
Thanks, Ram. Pleasure to be here.
May I introduce my second panelist, Suresh Rajagopalan. Suresh is the CEO of Bibmo, which is the NASPER's PayU FinTech company. Suresh has worn many hats, both as a banker and as a tech leader, 30 plus years of his career. I've known Suresh for more than 2 decades. If I may make this personal claim to fame of being associated with him beyond just our professional working together, is that we both hail from the same city called Trichy. So, Suresh, there you go. I got my 2 minutes of limelight. But more importantly, Suresh, when you look up his profile, one thing that fascinated me, Suresh, and I didn't know this till now, is that he has been a consistent gold medalist throughout his career. Yeah. So if I was to have been betting on someone, then I turn back 30 years and maybe Suresh, we all saw it coming then. Yeah. So thank you, Suresh. It's a pleasure to have you here, and looking forward to listening to you.
Very, very glad to be here. I think you just embarrassed me with, I don't know what those medals are.
Well, isn't that true? So
long back, yeah.
Thank you, Suresh. Now, the third panelist probably doesn't need an introduction to many of us in this room today. Tony Craddock. Tony is the Director General for the Payments Association in UK. Tony is someone who's, if I may actually take the liberty of quoting him, he is passionate about emerging payments and how it can transform lives around the world. That's a statement that one should actually be fascinated by. And he goes on to say that the only place that I stop enthusing about payments is, hold your breath, is when I'm climbing a serious hill on my road bike, is what he claims to say. So
yeah, well, I think I'd prefer to be on a road bike climbing a mountain today than sitting in a cold, wet London office. But anyway, there you go.
Thank you, Tony, for being here. Well, for those of you who didn't know, Tony also happens to be the co-editor of a crowdsourced book on PayTech. Yeah, so that's another part of Tony that is interesting to know. With the panelists is myself, the moderator. My name is Ram Kumar. I'm a senior partner with Cedar and IBS Intelligence. As many of you know, IBS Intelligence is a UK-based global fintech research firm and today's host. And we are pleased to bring this together to you in association with Hexaware. So just to give a context to everyone on how we will run this webinar today, we would actually be, of course, having a panel discussion with all the three panelists that we have here. And we would be following that with an interesting presentation from Ravi, post which we will obviously open up for questions from the audience. Now, if you thought you could get away by just dosing it out, we won't let you do that. And we would actually be, spicing it up with a few interesting polls, which the panelists would actually be also voting along with the audience. And we'll obviously be having that papered through the next 55 minutes. All right, so time for our first poll, and here we go. What, in your view, is the most defining attribute of a best-in-class payment experience? Now, I want to make an important announcement here. I know there are many people out there who wish that there was a choice called as all of the above, which is consciously and deliberately not included. So we want to see which of these three actually makes it to the final cut. We have 61% people having voted, 65, 67, 70. I see the participation levels going up. All right, I give 5 seconds more and we close the poll. All right. We've closed the poll. And before I share the results, can I ask the panelists, what would have been your choice? Ravi?
Yeah, my choice would be anywhere, anytime. If I
All right.
want to pay, I should be able to pay anywhere, anytime.
And Suresh, yours?
For me, it's going to be frictionless. I want smooth payments, yeah.
Interesting.
And for me, it's instant. There we go. All three of us, different answers.
Well, the audience seems to actually be following suit. There you go with the results. It's almost neck to neck with all three, right? I mean, that sets the tone for today's discussion. You clearly see that, the audience also believe that it's not any one of them, but literally all of them. And with that, I will quickly jump into the questions for the day. And I'll probably start with you, Tony. People say payments is increasingly Uberized, right? We're talking about real time and invisible. How do you view this statement? I mean, how do you really see this statement of payments being Uberized, and how do you see that being used, particularly by business users?
Yeah, so if you've had an Uber experience, you know what it's like. You essentially, the payments is invisible because it's completely integrated into the experience of buying the product rather than actually the payment part of the product. And what it actually means is that payments is designed in at the original inception of the new product, the new innovation. But of course, what is interesting is that's what the consumer experience is, which is wonderful. But despite the fact our industry has been going for a long, long time, behind the scenes, everything remains a spaghetti. Europe. I don't know whether you can have what's the global equivalent of spaghetti? A spaghetti of connectivity with so many different actors, increasingly attentive regulators, and to me, Uberization just means good product design. If you talk about how Uberization is being applied to business users, I think what's been interesting, that's a sector which has a great deal of, it has two characteristics. It has a set of problems relating to the movement of money that need to be solved, and it has a potential pool of profit, which is useful for everybody involved with the movement of the money. And so what's happened, particularly, I'd say, in the developed parts of the world, is where retail, it's really quite hard to make money in payments. But in the business space, it's increasingly solving problems around But if you integrate payment into their operating practices, you'll end up with more efficient billing, better collections, more efficient accounting, and ultimately the thing that most companies fall over on is improved reconciliation. My final point on Uber, I think, is quite interesting, is that it was once the, if you like, the flag waver, the Che Guevara of the revolution in payments, and everybody thought this was going to change the world. Despite its original flow of real differentiation, it's now had to conform to a whole set of regulations around tax, around employee well-being, and actually the service you get from Uber is now not nearly as good as it used to be. There's much more competition, and the price is more comparable to the traditional black or yellow taxis. And so, despite the fact that they made these big breakthroughs originally, sadly they've had to succumb to being a bit more normal. But there we go. That's how things go sometimes.
I mean, it almost looks like the way I'm hearing you say this, that eventually things come down to the equilibrium, and if it was all about getting to that state, then payments should be heading there as well. I don't think that's going to be exciting for many of the audience to listen to this, right?
Let me explain. The innovation in payments has actually helped to shift the thinking in our industry, and it's made many businesses benefit from integrated payments. I think Uber themselves, they just pushed too far. But having said that, the experience in an ordinary taxi now is much better, partly because they've raised the bar. And so does that help? So it's raised the bar, but perhaps not as far as they originally had it.
There you go. No, I think that's a very interesting comment you made. And I think one of the, we talk about real time, and the other poll answer that was actually competing very hard there was, frictionless payments. And I'm probably going to take this question out there to you, Suresh. I can see you smiling there. So, I really want you to help, share your thoughts on, if you had to actually view this whole concept of quote unquote frictionless payments, right? I mean, how it has evolved, and you've been in the industry and you've really seen this grow. You've actually been, you drive a lot of this frictionless payments today in markets such as India. How do you see this having evolved, right? And more importantly, what would your prognosis for the future be?
Yeah, thank you, Ram. I think Tony touched a very important aspect of invisible payments, right? Invisible payments has a little bit of ingredients, like if you take the whole payments journey, a life cycle of a payment, you need an identification layer where you need to know the customer who is making that payment, and then the authentication layer where you authentify the credentials of the who he himself identified, or what they said they are, or who he is, and things like that. And then the third is the authorization, and then the fourth is the the leg which is related to reconciliation, settlement, and clearing and settlement. So these are four distinct components, right? So the payment becomes frictionless if all these four work frictionless, right? Because today Uber probably would have addressed one portion of it. So the Uberization of payment, which he talked about, maybe it's touched about the the consumer making that payment to a merchant, or consumer making a payment to another individual, or he's making a payment to a government. As long as the whole journey, all the four blocks which I did, so knowing the customer, making sure that you profile the customer properly, whether the customer gives us mobile number, his device he wants to operate, and the location from where he generally operates, and you understand his behavior pattern of these transactions which he normally do, and all of that, if you analyze these patterns, so you need these four big blocks, right? The identification, where you do an EKYC, knowing your customer, doing an AML, sanction screening, and profiling the consumer, so you know the consumer very well. Then when he does the transaction, you authenticate and ensure that his ID proofing is done. The documentation which he gives is all verified real time and instantly. And then you cross the boundary of authentication to authorization leg to check whether it has balance to debit his core banking account or banking account. And then the last leg is about settlement, between the banks or between the bank to the merchants and things like that. So in my view, that frictionless is all these four entities have to be very seamless, and if it is very, very automated, very highly automated and process driven, so that the number of steps currently which is being done by the banks should get eliminated, then it is truly a frictionless payment. I mean, we all did our the banking launches, you will see that only net banking payments, then we started off with mobile banking payments that pause with PIN and all of that. So it just the journey evolved. Now today it is a contactless payments. You just tap your phone and then make your payment. The card becomes tokenized, so your credentials are tokenized. So just the whole journey becomes seamless and smooth to make you or give you that frictionless experience, right? And at the same time, not compromising on the security aspect of, because without that is where the the ID profiling or identification of the consumer who is going to make the payment is so critical. And so in my view, I think the identification authentication makes the payment so frictionless, because those are two very important elements. They are not only frictionless, it makes you invisible because you have done the verification beforehand, before you making the payment. So that is what, say, Uber does. You have already created your card details and all of that, and then you walk out, right? So the most of these, if you ask me about the prognosis of the future, I think like the technologies like Amazon Go, where just walk out technology, right? So you just do your transaction and just walk out. So it is like buy now and walk out, and maybe buy now, pay later kind of thing. Here, buy now and walk out, and payment gets done. And the second one is the set of like wallets, because the wallets, people said it is dying, but if you look at the wallets, it is another form of invisible payment, because the wallet gets automatically I would say that it is largely, if you compare even the emerging markets and some of the developed markets, the area of the queue, right? It's a beat the queue technology, right? So one is the walkout technology, where you walk out. Second is the beat the queue, where you don't want the queue, where you tap and pay, or show your card and make the payment, so that you increase the the velocity of the transaction. So those are some of these emerging trends, I would say. And all of this is possible with a strong token-based economies. So without tokenization, this frictionless, and without strong authentication, it won't be possible. So in a sense, frictionless is very, very critical, like for completing the journey of a payment.
Very interesting, Suresh. So identification, authorization, authentication, reconciliation, token-based economy, beat the queue. I think we have a lot of very interesting, powerful, takeaways from that. But the best part was buy now and walk away. Yeah. So I love that statement of yours.
BNWA, very good.
Yeah.
Buy now, walk away.
But I think you touched about, there was a lot of reference you made about automation, improvisation of processes, and it goes back to, again, underlying bedrock of all of this is technology, right? And I'm going to take that question to you, Ravi. I mean, I know you actually are a technologist, blue blood technologist. So I'm going to ask you this question there. Let's take the end user experience, as ultimately the outcome of everything we do, right? But as you make that so-called secret sauce, what is being fed in there is artificial intelligence and machine learning and cloud. And so you see a lot of these, right? AI, ML, cloud, they're all playing a very significant role, in what we call as eventually the user's payment experience, right? Now, question to you is, how do you see having, firstly, what's your take on that role? And more importantly, what do you see, or how do you see it evolving in, let's say, the short to medium to long-term future?
Yeah. Thanks, Ram, and very interesting perspectives from me and Suresh. Yes, the underlying bedrock is technology, and then everybody has been talking for a while to move to the cloud, and then the artificial intelligence wave came in, and now machine learning, the deep learning, and teaching the machine and stuff like that is happening, especially in the payment side of the house. But what we see today is that all three are discrete islands which are connected with very fast motorways or interstate highways. Very, very well connected, but they are discrete islands. To your question, right, how we see them evolving, definitely convergence is the way forward. Because cloud is now table stakes. AI is getting there. ML will get there. So there will come a point wherein, I don't know the name that service will get, but it will be a consolidated service which a payment provider or a payment functionality provider will just consume. And that will have all of this, not just a summation of the three, it will be a seamless integration in the right proportion of this, so that the so-called invisible payments or the frictionless payments, all that is taken care. But there is a way to go there. Like as Tony was mentioning, right? When Uber came, it was out of the world experience, but they couldn't sustain that. But they actually set the bar so high that it was difficult for them to scale at pace. And then they have come down. But then there are a lot of good things that have happened with it. So similarly in payments also, there is an evolution path that will happen. But then from a technology standpoint, there is going to be definite convergence with AI and ML and cloud, where cloud will be the foundational element. On top of that, you put in AI and ML as two different pillars, but they'll be they're like Siamese twins. They will be sitting on top of the cloud. That's where we foresee this technology to emerge in payments.
That's interesting. Yeah. So you're seeing the AI ML Siamese twins. And you're seeing the convergence as the critical factor. It's hard. I mean, I guess a lot of people out there in the audience may actually not let me leave this place unless I have this question posed to you, Tony. I mean, being the Director General of the Payments Association, it's hard for me not to ask you this question. There's so much happening in the last 2 weeks, right? The world of crypto. So obviously there's been an impact, let's say, on the confidence in the markets, and we clearly see the crypto and CBDC actually as critical, let's say, part of the story, the payment story as we move on, right? So question really is that how does this actually have an implication both on the domestic and the cross-border payments, both from a short-term standpoint and from a, let's say, medium-term standpoint?
So it's a really great question. I've got to say that there seems to be two worlds that we're operating in. There's a traditional world of payments where technology and regulation and innovation seem to be evolving to satisfy increasingly demanding consumers using what we know. And then from left field or right field, and I say this because England just beat Iran 6-2 in the first game of the World Cup. Ta-da! I will say that because I can't celebrate very often for England winning. The young pretenders is this whole world of crypto, and I remember going to the first ever Bitcoin Foundation conference in Amsterdam in 2014. 8 years ago, where it was going to be the future, and it's meant to be the future. And we've had all sorts of things that have happened since then. But for the audience, unless you've been sitting under a rock for the last 2 weeks, there's been a lot happening in the crypto world that perhaps calls into question whether it is the young pretender or whether in fact, and the future replacer of our current ecosystem, or whether in fact it's just a sham. I'll tell you what happened very briefly. A journalist started to dig around, looking at an underlying problem around collateral and who was owning what. It turns out this crypto exchange, FTX, was using its own collateral to support itself, which essentially printed its own money and put it in its own bank account. That was not exactly credible, but it was possible. It wasn't illegal, but it wasn't credible. And since then, $8 billion worth of value has disappeared, although the founder, Sam Bankman-Fried, he apparently still is at large somewhere in the Bahamas, and he's claiming to be out there raising the 8 billion back. So who knows? I think that's an investment opportunity for any of the audience. The truth is, what does this mean? By the way, I'm not a financial advisor, and I'm not giving a tip. So the question is, what does this loss of confidence mean? I think it's actually showing that good governance and good regulation is a prerequisite to a good financial services industry. And we believe in and we trust. As a trade association, I have 200 companies who are members of ours in the UK. We've just won the Association Excellence Awards Best UK Association of the Year this year, because we believe in good governance, good compliance. And it's quite clear that that wasn't in existence with FTX. It was able to grow without that. And I think I'm really, really hoping that of the two routes that this could go, one is this could end up with what's called systemic contagion. So you could, remember in 2008 that the falling over of the mortgage market in the US ended up with banks like Lehman Brothers failing, and so the consequence of this could be significant. I don't think it will be. I think it's more likely that we'll end up accelerating the pace of regulation. I think the true believers in crypto, who believe that a decentralized world of financial services is the right way to go, I think they're a bit sad and frustrated, but most are pretty sanguine that actually this is the right thing to do. And the reason why it's important for cross-border payments is the international movement of money is where there's most friction, most delay, most cost, and most fraud. It's got to be stamped out, and by bringing in this new technology with the right regulation, it can be done. So I think that's really why I think it's an important development.
Thank you, Tony. Most friction, most delay, and most fraud. If that doesn't give you any reason to adopt it, then what else will? But you actually, you made a very important remark about decentralization, right? And, the other side of a coin of decentralization is democratization, right? And I am actually going to take that question to you, Suresh. I mean, you guys have actually you're processing some 3 billion transactions annually, is that right? And I guess a lot of that is obviously, I'm assuming, is, what would have been the unbanked or the underbanked segment, hitherto underbanked and unbanked segment that, is now actually come into the foray, right? And that's clearly what the disruption of the payments has actually created, right? I mean, the whole democratization of payments. So what do you see, or let's say if we were to take this trajectory further, how do you see this unfolding in the future?
Yeah, just a small correction on the 3 billion. I think we do 3 billion authentications per annum. This is only for an e-commerce transaction. So that's a very big number globally across, like you said, emerging markets, including Africa and APAC customers. Of course, large customer bases from India. So I'll talk about, I think, there are two types of customers, right? One is unbanked, another one is underbanked, right? Underbanked because they can't reach, there is a less reachability for those people. Unbanked because of educational divide in terms of knowledge, and it could be for various reasons, right? So there are two types of, I would say, two types of people to be, you need to reach to two types of audience. One for unbanked, another one is underbanked. And the second element is that today banks have been trying to reach that audience, and probably still around 1.7 billion adults remain unbanked. That's a big number. It is almost like another India to be unbanked. Like another Modi has to come and bank like Jan Dhan Aadhaar Yojana, like what they did in India to sort of create a bank account for 1 billion people. Another 1.7, 1.8 billion people still not banked. Partially, these unbanked population got addressed through these e-money licenses, and sometimes it is through the mobile money accounts and different names, and sometimes it could be even a prepaid account. So that from people were trying to bring that from a unregulated economy to a regulated economy, so that the money movement is visible and things like that. So all the governments across the world, they've been trying to bring reachability or access to these banking system at the lowest cost possible. I think these are the two elements, right? One is unbanked, underbanked, and then you need to have a reach and at a lower cost. And irrespective of whatever you try, banks cannot lower their cost because they have behemoth of infrastructure, and you can't do that if you the last mile is always a problem for them, which is where the new age fintechs coming into play and helping those banks to bridge.
We have a friction there, I guess. All right. No, we'll wait for Suresh to come back. But till we have Suresh back, maybe Ravi, I'll jump to you. And I'm actually going to be since Suresh is invisible for a moment, I'm going to take the invisible mode of embedded finance as the theme to ask you here. So tell me, I mean, if embedded finance is obviously the way to go, and invisible mode of payments is actually where you see things evolving. What does it actually mean for the players, who actually are, working on? Suresh, I'll come back to you. I just thought I'll take the opportunity to go to Ravi.
Sure.
Yeah.
Yeah. Thanks, Ram. See, embedded finance is going to be the next big thing, because that will push many of the financial services towards commoditization. They will all become commodities. And the size and scale of this will be unprecedented. Just, I'll give you an example. Travel, right? About 37 to 40% of the world's travel that happens is online today. And Visa is pushing virtual cards in a big way. Why? It's part of accelerating the embedded finance journey as part of the invisible payments play. They've already started. But for invisible payments to become prime time, like many other things are happening today, like mobile-based payments, faster payments, and all that have become like part of life today in the UK and other parts of the world. This will take a few years, but it's all getting there, because it will take some effort for banks and technology companies to understand the risk exposure and the risk appetites, because that will play a very crucial role in arriving at mutually beneficial agreements across the parties. Once that is established, technology is already there. This is one of those rare moments in history where technology is ready. So that's the big thing here.
The secret sauce is there, and the food is to be served. And we're talking about spaghetti, and we talked about, but actually you made a reference about risk appetite and what is mutually acceptable, between the parties. And maybe as an extension to the comment that you were making, Suresh, earlier, and if I can actually go back to you again, one of the things that we are actually seeing now, right? I mean, is the evolution of the concept of digital lending and microcredits. Embedded finance obviously is an extension of the same thing, right? Now, this is obviously driven by AI models. You see that there's a lot of data that is being generated that obviously is being put to use. Do you see this? I mean, are we at a stage where it is refined? And going back to the comment that Ravi was making, that the whole discovery of risk is actually in vogue right now, and we obviously are in the journey. So where do you see this going from here, and when do you think we can call ourselves to have got, quote unquote, at the refined stage here?
Yeah, I think, sorry, I don't know, it got interrupted in between. I was thrown out of this Zoom. So
not me.
So yeah, I'll just close my thoughts on that earlier on the the democratization, because the two or three things which are very important. One is like I mentioned about the reachability and the access at a low cost. The fintechs are bridging that gap, or the big techs are coming in and then playing that role to bridge the gap between underbanked and unbanked population. The 2-3 elements there, for example, in terms of how the governments in respective countries are helping I know, look at the way the mobile evolution in India, similarly the UPI or the the new standards getting formed, either open banking standards or a new standards. So one is the framework and the standards and the infrastructure, like a digital infrastructure to be put in place. So then the true democratization can happen. Everybody can join that bandwagon and provide that reach and at the lowest cost. So I think that is very important and aspect which I wanted to cover as part of the democratization of this payment. So I think the question which you talked about on the AI and model, I think there are few technology trends which is impacting digital lending in my view. I'm not an expert in lending, but I just looking at this the kind of I would say the trends which are emerging. One is, for example, a hyper automation, right? The more and more automation towards credit decisioning is very important because the technology which all of us were used to, the OCR and automated data document recognition and all, it used to give a recognition of 70%, 80%. And now it has really improved thanks to the AI and ML. So you are able to now scan the document in a faster pace and with more accuracy, right? So aggressive automation around credit decisioning using these documents, and these documents also in a digital form being made available by governments. Then the hyper personalization, right? So one is the the ability to automate. The second is the hyper personalization thanks to the data or the behavior data, right? How the user is using these products and services and where he uses. How do you bring the hyper personalization aspect of it? And the heightened cybersecurity prevention, right? While at one point in time, the cybersecurity and frauds are emerging, but equally important measures are being put in place to bring that digital ecosystem. So your ability to see all transactions being processed in that. And then we also see that the lending, like Ravi mentioned, it is how it is getting embedded, right? It's not anymore like at the time of checkout, we are offering a payment, right? I mean, or a loan or an EMI. And it is not like, you go and fill up a big form and then get a loan, which used to take 3 to 7 days. Now it's in 30 seconds, you are able to get a loan, buy now, pay later kind of a model, and on the instant EMI kind of thing. And the EMI rails are on debit card EMI or a credit card EMI without even having a loan account at the back end, right? So a lot of this is thanks to these automation and things like that. And also most of this thanks to, I think Ravi also mentioned about the cloud, right? Because if you want to offer this whole amount of data and all of this have to be residing in one place, it becomes very difficult. So the decentralization of these data and democratization of this data, or orchestrate these data whole, and then provide a risk score or a credit risk score and the ability to do SaaS kind of a model, right? So software as a service, very important play in this whole credit journey, right? And then the last one, I would say that it's also very important about the partnership, which is like how the fintechs are partnering with the big tech, fintech, and banks are collaborating. It's like a triage. Earlier, it used to be like always a fight between whether you are a tech fin or a fintech and whatever this conversation. Now it is all three interplay and trying to serve these unbanked population, provide them, offer a microcredit, micro insurance, and all micro mutual funds at the lowest cost possible, at the farthest distance from their bank. So I think the whole journey about this is becoming embedded in their lifestyle and in their way of working, frictionless, and ability to offer this service in a data-driven decision. Basically, I think I would say that these are the emerging trends in terms of
beautiful, Suresh. No, I guess you've probably read my mind, and I was actually going to go to you, Ravi, with that question about how do you find these various players, right, between, as Suresh explained, the fintechs and banktechs and financial institutions. Maybe, I know you have a presentation to make and we are eating away into your time. So when you're presenting, maybe I would like you to actually touch about that question. But just so that I close this panel with a question back to Tony, right? There are a lot of comments that were made, Tony, during the course of this discussion about what's likely to happen about regulatory reforms, right? And then, and we are also talking about risk appetites getting discovered, or let's say, that's in a different context, but, I'm going to bring it down to simple, basic, the risks that, banks that what they should be wary of. And in that context, you obviously are the Director General of a large body, which obviously is helping in driving a lot of policy making. And from a regulatory standpoint, I mean, what would you think are the reforms or the norms that need to be brought in and you expect to see, let's say, in future?
So I'm neither a lawyer nor a regulator, but it was fascinating listening to Suresh's comments there, because there's clearly so much going on. I think as a regulator, I'm likely to be phased. There was a tradition when the Financial Conduct Authority used to have laid itself out as having 3 goals: promote innovation, protect consumers, and encourage competition. It was really very easy. Then we've had this explosion in the last decade, fueled by FinTech and talented people, like Ravi and Suresh. It's great to see that level of innovation. The regulators, I can't speak for regulators around the world. I'll just reference what I'm seeing happening in this country, and quite often we're the precursor for other countries. The regulator here is seen as being a standard setter. The first thing it's doing is it's recognizing that consumers and businesses are much more likely than they ever have been to be scammed, or for money laundering to be taking place. There's a lot of work being done to increase consumer protection of both money laundering, or to prevent money laundering and fraud. So that's the first trend. I also think we're going to get increased scrutiny by the supervision teams and the authorization teams. It's going to be harder to get licensed, and it's going to be harder to stay licensed. This is just the nature of the world we're in. We're going to have to work harder at ensuring compliance, making sure that our applications are good, making sure that we've got strong business models, that we're well funded. The bar's going to get higher. And the other thing that's a strange quirk I'm seeing with something called the consumer duty here, consumer duty is giving us responsibility for the other participants in the value chain. So I may be a processor, I may work with an acquirer, and that acquirer may work with a merchant who works with the consumer. I, as the processor, have to be cognizant of, aware of the ultimate user experience in the design of my products. And I need to consider the risks that are attached to the use of my product in the end user. Now, that's pretty weird, isn't it? That's pretty weird. Normally, we would have developed something and my next buyer would be the one evaluating the risks. No, that's not going to happen in future. So those are just 3 trends. There's lots of others, but as I said, I'm not a lawyer. What the risks are, and what does that mean is, it's going to be harder to comply. We're going to end up it's going to end up costing us more to run our businesses, and somebody's going to have to pay for that. We're going to end up, as a result of that, with less competition and, sadly, less innovation and more dominance by bigger companies and reduced relative competitiveness. Now, I'm sorry to say that, because I'm totally pro-innovation, I'm pro-competition, and I'm into helping our innovations improve the lives of people around the whole world by helping them move money better. It states it on my LinkedIn profile. So that's the world we're in, though. It's a reality. And I think with that backdrop, I'd like us to think of something really positive and enthusiastic and upbeat to talk about.
That's an interesting takeaway there. Yeah, the more the cost of compliance, the less the competitiveness of the industry and lower the innovation index, right? So, couldn't have said it better. I guess, unfortunately, we are running short on time to continue this discussion, but there is a very interesting presentation that we have from Ravi coming up. But before we go to Ravi, I do want to go to our audience to ask them what they think on this question, which is, which of the following would you pick as the most impactful primary driver in the growth of what we see as payments volume? Is it the collaboration of banks and fintech players? Is it the advent of AI, ML, and cloud technology? Or is it the fact that we now have the unbanked and the underbanked being reached out to. What do you think is driving the growth in payments volumes? Once again, we don't have all of the above as a choice. Okay, I have 15 seconds more. Can I confirm if all of my fellow panelists have casted their vote?
I can't. We can't do that.
We're not allowed to.
We can't. You didn't allow us
No,
to.
we're not allowed to.
Oh, haven't I? Oh, my.
No, you haven't enabled us.
Oh,
I
right.
thought it was
Okay.
by design. So
Okay. No, then I'm going to actually then ask you to say what, I mean, now that you won't influence the, I'll end the poll, but I won't share the results. So we'll have your vote declared to the whole world. Yeah. So shoot, Suresh, we'll go with you first.
I think for me, the reach into the unbanked and underbanked is very important because the enablers are the other two. But no, which one will primary driver will be the
Reach. Okay. Ravi?
Again, for me, the collaboration of the banks and fintechs has brought in a fundamental change to actually use this form of payments. So that collaboration has formed the foundation for everything that we do in payments. So that's my take.
And Tony?
And I agree with Ravi here. It is a prerequisite. You have to have the collaborative ecosystem. Otherwise, we can't fulfill our potential as an industry.
Gentlemen, before I share the results, I have to make an announcement. And that announcement is that this poll is, I swear, not rigged by any imagination, because that's the kind of impression you would get when you see this result.
Wow.
Wow.
Man, couldn't have been better, right? I mean, this is like
awesome choice of the question.
Yeah.
Choices, basically.
Goodness me.
Yeah, that's a nice question.
All right. So with that, I would request Ravi, if you could actually help share your thoughts on what you wanted to present to us.
Sure. Thanks, Ram. Let me just share my screen so that it's easier. Is it visible?
Yes.
Yes, we can see.
Just give me a sec. So that, yeah. So we've been talking about payments and the changes that payments has brought, and fundamentally how people have changed, right? Somebody used to tell in the past, right? I'll fax you cash. That's really possible today. I can actually use GPay, Apple Pay, and actually send money. And nobody wants to use cash. And when you use cash, you become an alien. So that's the reality that we have reached in certain markets for sure. And that's where we are. Whereas there are other markets that are catching up, and there are other ways to pay. Well, that's a disparate world, but then we all know that so many things are happening. And even in this last 30 minutes, we have spoken about many things, and all of these things are happening at the same time. That's what it is. And Tony actually mentioned that so many things are happening, and all are happening at the same time. So much of changes. So what do you think? What do you have? So what we thought is, okay, with so many things happening, we need to have something like a payments telescope, and that's what we call the Payscopium, wherein when you look into the payments telescope, you look at the life that you're leading today, which is payments as an experience, sitting in this call and actually pay my bills over an app using this device over here. I can just do something and it will be done. That's an experience that I have. Then the next evolution, while this is in vogue, that comes in, which is payments as a lifestyle, wherein the type of currency that I will use will change. And then finally, the ultimate nirvana, which is what Uber promised when it came, right? Which is what invisible payments, wherein Suresh mentioned, right, about the Amazon Go stores. You buy now and walk out, buy and walk out, right? So that can be achieved, but that will happen in various stages, and all these stages will run in parallel to some extent. So from 0 to 5 years, if it is today 0, and 5th year from now is where invisible payments will become life, the way of life. That's what we look at, and we kind of feel that that's a point of view. That's a point of view from what we have seen and where we sit. We have a unique position, right? We get to be in parts of all teams everywhere across the globe, and this is like the synthesis of what we've been seeing is that while payments becomes an experience, it's going to become a lifestyle, and then it is going to become an insignificant byproduct to life. Payments is going to become an insignificant thing. That's where it is. So that is a very profound statement, but that is going to be a reality very soon. And there are a slew of technologies that are going to play a very important role in each of these steps. Like today, we've been talking AI, ML, cloud, open APIs, and stuff like that. These are the words that we've been using today. Very soon, blockchain will mature, and with the so-called CBDC coming in, and the cryptos will become much more reliable because CBDCs will be expected to be underwritten by the governments, respective governments, and banks with whom people have done have reposed their trust for several years. Payments will become a lifestyle. And then not to mention that biometrics will become a part of life. Today, in the place where I live, if I forget my wallet in the car, in the shopping mall, and I just have my mobile phone, I can still shop. Not a problem. But then what if I forget my wallet and my mobile phone in the car? In a few years' time, thumb impression should be good enough, or my retina display should be good enough. That's where biometrics will come into play. And then as things mature with pace and scale, the Amazon Go concept will become reality. You just have to walk in. Maybe your metaverse character will actually do the shopping and selection for you, and you just walk out. That's how things are going to evolve. But the big thing that is going to happen is embedded finance, which will actually enable financial inclusion. And that's what Suresh has been alluding to, no? Banking the underbanked and the unbanked. That's going to happen. And this is all real. And if somebody had told me this about a year ago, I would say, okay, what are you smoking kind of stuff? I would have asked that person. But today, this is a reality. And we are seeing that people are moving towards that. So that's where we see the evolution of technology as well. The convergence that I was referring to earlier is what this picture is all about. From left to right, each of the technical elements will fuse, and then confuse, confuse us. And finally, it will evolve into an insignificant portion wherein you will take it for granted. You'll take technology for granted because that is what it is supposed to be. And then payments becomes invisible. That's where the contours of technology will change. So that's what we are seeing. While I'm saying all these things, people in the payments business will tell you, okay, Ravi, this is all high level stuff. Where is the blueprint? How is it going to happen? Payments as an experience, as illustrative blueprint is what I'm showing right now, wherein you have the acquirer, you have the issuer, and then the processor in the middle, and then there are several piece parts, like Suresh mentioned, reconciliation. But there is one important part which people often forget, is the investigation and the repair.
Big part.
What if something goes wrong? Investigation and repair is going to play a very important role in all these machine-driven, technology-driven payments. Today, there's a lot of human touch involved there that will come down, and machine involvement will go up. And then the importance that it carries will also go up. And in the bottom right of the screen, there is one hexagon that says data monetization. We've been hearing this term for a very, very long time. Data is the new oil and all that stuff. It is not become the new oil unless you actually monetize. And payments is one area where you can actually easily monetize the data, especially closed cards or closed loop payments. It's a very easy place to actually know where the money is flowing, why it is flowing, and what purpose. And you can monetize that. So that's the kind of ecosystem that we're talking about from a payments as an experience. Now, go to the next level in your telescope. You actually adjust the lens and you go to what's going to come next. PACS will give way to PAL, where payments will become a lifestyle because cryptocurrency and CBDC will come in. The digital currency is most likely to become the default currency in a few years. Well, somebody will throw me off my chair. Somebody will say, no, it's going to take its time. But well, I agree, it might take some time, but it's going to come. And it's going to become a reality. The advantage of this is you get programmable money. Today, money, when it changes hands, it is defined by the ownership of who owns that money. Tomorrow, it is not just ownership, what type of money it is, and what's the purpose of it. For example, especially in government to citizen transactions, right? If government gives a grant for housing or some specific purpose for medical purposes, medical care, you cannot use that money for refinancing your home. That is the transparency it will bring in society. That is going to uplift the quality of life for people. That is what PAL, that is what we call as lifestyle. Lifestyle will change with programmable money. And we will definitely hit that social segment where, the last mile issues will be resolved to a great extent. Yes, humans will be involved, and hence there will be some issues here and there because machine has no emotion. Machine will just do what's it's supposed to do. So that is where, as a lifestyle, in 2 to 4 years, we see money will become a programmable entity. Yes, it will not have an expiry date, but it will definitely have several nomenclatures inside it. Then as we move along, the next one, which is where we all want to go, invisible payments. We've been talking about it, but this will be the most matured form. This is how Uber was when it was launched, right? Basically, the acquirer and issuer get fused. Then you have blockchain, unified infrastructure. Blockchain will become much more trusted technology. Distinction and democratization will happen. And then what will happen is payment will become insignificant. It will become an incidental byproduct. That's about it. So that is where things are happening. And this is here and real. How banks adopt, how they become the aggregator of the customer's data and the customer's experience, aggregator of the experience, not just the data, is the play. The value of this to banks and fintechs is how do you aggregate your customer's experience? And how do you ensure that you build on the trust that the customer already has on you and enable them to unlock additional value? That is where payments is going to. So that's one area that I wanted to see, because when you embed finance into the transactions, we're looking at 120 billion plus dollar industry by 2025. And about 8 to 10% of the working capital that is required by this industry will be generated by its own transactions. Just imagine your payments transactions will unlock capital for you and for your customers, especially in the SMB segment. It's going to be a fundamental disruptor. So for that, the Payscopium, which is the payments telescope, can actually tell you what's going to happen 0 to 2, now what's going to happen in 3 to 4 years from now, and finally in 5+ years, where are we going to land? That might give you a kind of a compass or a method to the madness, but by no step of imagination, I'm going to say that this is the only way. This is one way of looking at all the entropy that is there in the payments world today. That's precisely what I had to share today. I just wanted to share because we have the unique advantage of aggregating everybody's mistakes and experiences, as they call it.
Thank you, Ravi. Talk about aggregating experiences, and it was talking about entropy of payments. I mean, that was a very powerful presentation. I already had a few comments coming in here from people in the audience commenting about your presentation. We will open up, I know we actually have the time up for the session, but I know that there are people out there wanting to ask questions. So we will open up there are people who are listening to us. You will find there is a Q&A button. You could actually go in there and pose your question. and then we will actually have them channelized to our panelists. But before you ask us questions, we will ask you first. So here is poll number 3. And we have this question for our audience. What do you think would be the biggest game changer in the payments landscape? Is it a broader adoption of CBDC and crypto? Would it be the embedded finance and invisible payments? Or would it actually be the global norms and regulatory standards? Don't forget what Tony said. When the regulation goes up, your competitiveness goes down, and that's also a game changer, right? So I'm giving some leading suggestions to people out there. But while we are waiting for people to complete their poll, I have some questions out there, and I would actually, there are people who are posing as anonymous attendees. I would appreciate if you can quote your name. It's easier to then refer that to the panelists. Sorry. So let me close the poll and let's see what the results are. So after that powerful presentation of yours, Ravi, I don't think there is any prizes for guessing what the winner of this poll is.
Mm-hmm.
And the lion's share goes to embedded finance and invisible payments. So I guess almost half of our audience believe that's going to be the biggest game changer, followed by crypto and then the global norms. Well, I have a few questions, and I'm going to go first with, it's coming from an anonymous attendee, but it's a very powerful question. Are the countries where the adoption, which are the countries where the adoption is likely to be leading, and which are the countries that are likely to be following, and why? You may not quote a country, you may also quote regions if you think that's more comfortable. So maybe, Ravi, you want to go for that?
Yeah, definitely. From what we are seeing is Asia Pacific is leading definitely in the adoption of digital payments, followed by Europe, and then as you move, only just a few months ago, FedPay has come into being, right? So that's the trend that we are seeing in no particular order. But then with the pandemic, the digital form of payments has been accelerated, right? Every small and big service in India is now has a QR code and payments associated with it. So thanks to Suresh and his group, that has been enabled. So in my opinion, that's the order. But then Tony may have.
No, I mean, I guess that's what we are observing right now in the industry, and I don't think any of us would disagree with it. But you actually alluded to something about Suresh, and I'll take that. Another question this is from Chetan Parekh, your friend there, Suresh. And the question that he wants to ask you is, how do you see B2B payments vis-a-vis B2C payments in terms of their growth?
Wow. So I'll tell you, I was reading somewhere, I think it was Visa annual report few years back, I think a couple of years back at least. The payment flow is almost close to $185 trillion. Out of this, only $45 trillion is retail payments. The rest is B2B. So you can imagine the amount of money is still not touched or not transacted. If you take an India as an example, if you take, let's say we are a $3.5 trillion economy, out of which if you take e-commerce volume is almost like $250 billion. Card prepaid is around 65 billion. So remaining you take, for example, it's all the government to business, business to business, business to, so much to digitize and automate. I think it's huge opportunity, huge potential for B2B. But I think I want to hasten to know what Tony mentioned about the regulatory requirement, the frictionless, the payments investigation and repairs, which Ravi mentioned. All of that comes into play in B2B because the money that gets transacted is huge. And I think the level of automation and sophistication is still very low in the industry. So much is an opportunity for people like us to support that ecosystem. So I think in my view, I think I would vote for B2B growth.
Yeah, I think, and rightly so. Thank you, Suresh. There's a question from Sanjeev Kumar, and I'm taking this to you, Tony. And how do you see the role of companies like Google and Apple in the emerging frictionless payments?
The quick answer is very important. They're very important. I think what was interesting is Apple are playing a long game in payments. They've spent a lot of money testing things out, developing things, launching them, and then shutting them down when they don't work. And what they've done is they've found a way of actually monetizing this very, very sweetly. We all know that if you transact through Apple, you pay the acquiring network much more than you would through any other means. And that's because they know they have access to the premium market space. Google have done a very similar thing. They've got particularly good in e-commerce application that where you makes it very convenient and easy to pay with whichever credit card you happen or debit card you happen to want to. I think they're very important. They're essentially defining the standard of consumer experience. So I think they're very important.
Follow-on question from Siraj there, which is actually talking about the role of Visa, MasterCard, and Amex, particularly on cross-border remittance. You have a view on that, Tony?
I do. I think they're very, very powerful, but very, very important organizations. They are essentially quasi-regulators. How many pages are there in the in the rule book of a MasterCard or a Visa? Probably almost as many as pages in my new instruction manual for my new Mercedes. 573 pages of instructions. It's ridiculous. By the time I've read my instruction manual, I'll have sold the car. Anyway, I think they're very important. They set an example and they set a set of standards which we have to comply to. They also invest a lot in the market, and MasterCard and Visa in particular have done a great deal of good by helping us to be more focused on financial inclusion and on diversity and on other things. So I think that they're good players. They tend to be taking a large amount of profit out of the market. So as such, I think hope they're not too greedy, but they won't mind me saying that because everybody likes an entrepreneur who makes good money. They've just got to make sure there's enough left over for the rest of us.
Says the Director General of Payments Association. Well, Ravi, I guess we're already 8 minutes past our deadline, but I guess we can afford to have this one question as a last question to you, Ravi. Can you throw some light on what you think are the critical success factors for PaaS, which is payment as an experience, payment as a lifestyle, and invisible payments?
Yeah. See, the fundamental accelerators is obviously, as I said before, right? The agreements across the parties to share the risk exposure for these transactions. That's a fundamental thing that is required, whether it's PAX, PAL, or invisible payments. And then the technology required for PAX is already available. So we are experiencing payments as an experience, no doubt about it. So we just have to accelerate what we are doing. But the bigger accelerator for PAL will be the CBDC. The governments officially recognizing or providing their weight behind their respective central banks. CBDC, the central bank digital, that currency comes in, PAL is going to be there, and then programmable money, and then the works will happen. Definitely, that's the biggest enabler for that. For invisible payments, it's just a question of time. The moment we have gone to CBDC and blockchain-based technologies, it's a question of time. It's like water flowing from a higher level to a lower level. Gravity will pull it. Similarly, market will definitely take it to invisible payments. A prototype of that is already available with Amazon Go. So I think, in my opinion, the next big thing that will accelerate this whole thing is governments providing CBDC and the digital currencies of the respective countries coming. And that is what we will be talking. No more physical currency, it will all be digital.
No more physical currencies, only digital currencies. CBDCs all the way. Well, on that note, ladies and gentlemen, I unfortunately have to draw the curtain. It's been a fantastic panel discussion. We did spend 10 minutes more than what we actually had signed up for, and apologize that we actually had to go this far, but I'm sure it was all worth every moment. Thank you, Tony. Thank you, Suresh, and thank you, Ravi. I really enjoyed every minute of this discussion, and I'm sure the audience did. I know there are a lot of, in fact, to be precise, there are 10 questions out there that remain unanswered. So, I would encourage you to write to us, and we will do our best to make sure that we go back to you with the answers to the questions you want to ask panelists. We'll try and get them coordinated and get back to you. But I guess we can't keep everyone waiting. So thank you, panelists, and thank you, audience, for staying with us.
Thank
Have a
you
good
very
day.
much indeed.
Thank you, Ram, for
Thanks.
being an excellent host. Thank you.
Bye-bye.
Thank you.